Friday, August 16th, market analysis, Stan Ehrlich. Good morning, 9:52 California time. And we have again some minor but new highs in the stock indexes. And we are still long some of the indexes from almost the low day. The E-mini. We start out with the stock indexes and go to futures and sometimes cycles, forex, crypto, you name it. Now, E-mini daily data chart, all you really need to do is look for the green bars and the red bars. The red bars, daily candlestick bars, are my custom color. They're not obviously the bodies, the usual red and green. Red means it's a sell signal, whether it worked or not. And the green means it's a buy signal. Obviously, many of these signals are at tops or super close to tops, or bottoms or super close to bottoms. And what's really important is what happened after the green or the red. If it's green, you don't want any new lows. You don't want any major retracements, and a little bit halfway back, you can catch ER3, but ER1 is always in if it's green or red. Green long, short if it's red. This trade got long, if I remember correctly, very close to the close on the 8th of, this month. And we bought darn near the high of the day, but then it closed, boom. From that point on, we didn't have much trouble. A little bit of a dip, and you can see the green vertical line here. We call it a trade line. It's connecting the entry price to the current quote or the offsetted price. But it always shows you if it's red, it was a losing trade. If it's green, it's a profitable trade. The yellow dots are the automatic. Everything is automatic. 100% automatic algorithm. You can change the rate at which the yellow line moves, the trailing stop moves, but that's all I allow because the entries are really, really good most of the time. And the stop could slow down a little because of personal preferences. If you're an investor, you don't want a fast moving stop, probably. But if you're a scalper, you have to have a fast moving stop because you're going to be out by the end of the day. So there's a great difference. And the adjustability of the stop is absolutely a feature built into the four different strategies: ER scalp, ER1 scalp, ER1 overnight, and ER3 scalp and ER3 overnight. So ER1 overnight, we're still long. Wow. Now that's fantastic trade in progress, and we've locked in a substantial profit. The low today came fairly close, but that doesn't count. And we're still in the trade, and it's new high for the ground. Now, my personal opinion is that we're getting, as I've been saying, well, unfortunately for a few days, and look at the size of this move, very close to a top, a turning point back down again. Okay, enough said. I'm still looking for these indexes to all go down in general, probably the NASDAQ the fastest going down into October, which is now only 6 weeks away. And the October lows have only failed 3 times since 1997. That's over 90% of the time. It has been a major or at least significant buying opportunity in October. Sometimes there's small moves, and then November, December don't go up. And the last couple of years, they have been unbelievably spectacular. Go look for yourself. Don't trust me. Next chart. E-mini and a short-term 5-minute chart. Same trade, entered very close to the close. And our trailing stop in obviously 5-minute detail. So even today it has moved up some on the daily chart. You don't see the detail. You see a longer term picture. Next chart is a spider. We didn't get a buy signal at the bottom, but this head and shoulder top formation, which I've detailed before it even broke out to the downside, worked in 2 days. Your breakout was August 2nd. The downside objective was fulfilled almost exactly. and the next day and got oversold. So the formation is now come and gone, and it was great. Not only that, it worked spectacularly fast. So this big move up here really has nothing to do with the head and shoulder, except that does represent a lot of technical historical resistance. Now, we gapped up yesterday in the regular session, 6:30 to 1 o'clock California time, stock market hours. And I think that's going to go down as an exhaustion gap. But we're now making new highs, basically high and last or almost, and not stopping. We are at or close to a couple of different levels that could stop the rally. Now, Spider 5-minute, big gap yesterday in the opening, coming up fairly close to a particular important high. The QQQ gapped up yesterday morning, is now a minor new high again and in a resistance area. It could be trying to close an old gap there, and I cannot rule out everything up to here. Now, I don't expect a new high for the whole trend, new historic highs. It's possible. I just see lots of indications that the likelihood of that happening, new historic highs right away, like in a week or less, doesn't seem probable. And I do think we're going to be turning down and going to stay in a down mode for the next, what I say, 6 weeks, 7 weeks, 8 weeks, 9 weeks, something like that during October. Next, we have the QQQ short-term 5-minute chart, minor new highs for the day. Here's the last important historical high. Zigzagging our way, typically down, exhaustion gap on the downside, support kind of held, not the greatest. Looking for a top here, ladies and gentlemen. Now, the NASDAQ has been just superb for us in the last several weeks. We got a sell signal on the very top of the NASDAQ futures contract, NQ September. Sold short on that day, and we got a new short sale the next day, ER3. This happens to be plotting the ER3 overnight all the way down and got out of that trade on the low day, which was August 5th. Not at the bottom, unfortunately, but the low day. A couple of days later, we got a brand new buy signal on August 8th, and this is the ER1. And here's the trade line, and we're new high and last. I'm thinking of even tightening the stop even more by changing the kicker. And it's because we're getting so close to overbought and a resistance area. I don't like giving away really great trade profits like this one, but you got to be very careful, because if you get your stop too close, you're obviously going to get hit, and then the market's going to go on and go, go, go. That's what happened in the Russell Index. I'll get to it in a minute. This is the NASDAQ 5-minute chart. It shows you the previous trade from the top all the way down. That's the trigger line, the little red one. Sold it real close to the high of that day. Hardly had a minute or two, well, maybe an hour or two when it was a losing trade, and all the way down, did great and got out on the low day, which had a little tiny double bottom in there, and flat for 1, 2, 3 days, and back on the long side of the market 3 days after we got out, right on the close, and still in the trade. Almost a new high here. Doing fantastic. Next chart. And these are ER signals. We sold the top of the market in the YM Dow Jones futures. We bought almost the bottom of the market with a green buy signal. We sold a high back here on May 20th, and we sold the high on April 1st. Oh yeah, we bought the low on April 19th. That's a top, bottom, top, oops, I missed, top, bottom, and a second buy signal on the way up here. You're not going to see that very often. I mean, I'm very proud of it, but that's spectacular. The YM detailed, and we'll just see that it's making new highs. Russell. Now, we did get a sell signal at the top. Unfortunately, it wasn't the highest high during the double top formation, and in resistance, down it went. We're not on board. We had a small losing trade right there. Next, we got a buy signal just a few days ago on April 13th. It only lasted a day because watch. Bought it here, again, August 13th. The next day, the Russell had an extremely sharp rally in just a matter of 5 minutes or less. That pulled my trailing stop up very, very sharply, which it should have done and did, probably faster than most people would be able to do on their own, or even see or notice it or know what to do. Because Jesus, people, when you're rallying like this, what are you thinking? Wow, I'm making a lot of money. This is great. Wow, it's heaven. It's never going to stop. And you don't really think, most people, about protection, raising your stop, locking in a bigger profit. The code don't give a damn. It does it for you. And it's flexible. Anyway, great trade, 24 hours. Wish we were still long. We're not. Bonds. This is one of my longer term, and I'm not used to long-term forecasts. But because of the profoundness of the October timeframe, I don't know why it happens. It just keeps happening. What do you need to know? It's different every year. Elections, politics, disasters, weather. I don't know. It's always something different. So I'm looking for a buying opportunity in my green circle, which is left to right October, top to bottom. You can see the price range. And it is just a little bit on top of what currently looks like a neckline of a head and shoulder bottom formation. So that minimum upside objective is 140. I'm still looking for 140. But after it zigzags its way down for approximately 6, 7, 8, 9, 10 weeks, somewhere in there, during October, in the circle, I'll be tickle pink if it turns around and starts to go up again. 10-year notes, same story, same formation, but we're in a resistance area and got overbought. And so it's starting to slip. No surprise. I like what I see so far as the downside correction is concerned. Crude, pretty good break today. Bumped against resistance very, very nicely just a couple of days ago. Classic, minor new low for the moment. I think this large pennant formation that we are in, and I'm going to adjust this line because apparently the contract month has changed, and slip it down a little bit. Everything else is the same. Just drop these support resistance zones down a little bit. There we go. And we're in a pennant, and a pretty decent looking one, and very large. So we're getting squeezed between the rock and a hard spot. And not only that, at the high side, at the bear trend line, we're also at a resistance area, let alone the line being resistant, so as well. So I'm waiting for a signal, and we could bounce in and out of this pennant here, or within the pennant, I meant, for a little while. Next, natural gas, starting to slip. Yesterday touched pretty accurately my beginning of resistance area. Great. Not getting overbought yet, but it doesn't have to be. The double top formation that I detailed back in June, middle of June, late June, finally got to its minimum downside objective July 29th. So that formation's come and gone. In fact, I think I will now remove the appropriate lines here, and let's go with that one and then that one. So now we've got a cleaner chart. All we've got is a bear trend, resistance touched. It's going to make new lows. Heating oil, going to make new lows. Sold the top or almost on the rally high, red. Sold the top almost on the rally high, red. Same comment. This wasn't a big break, but there was profit in it. This buy signal didn't work very well, but there was also profit in it. And this one, probably not. This one, probably not. But we got some great signals. I mean, that sell signal's almost on the top, almost on the top, almost on the top. Not good. That's a rally high, and we had a buy signal. Anyway, bear trend, recently new lows, bounced off support, expecting support to be challenged again, may be broken, bear market, next, gold. Wow, it touched my bullish resistance line. I detailed why it's called a bullish resistance line several times in the last week or two. It's called a bullish resistance line because the trend of the line is up, bullish, but prices are trading under the line and they rally up to the resistance line, stop, and pull back down. So you drew the line off the first 2 points and it worked perfectly here, came very close, and it might work perfectly here because we have stopped right at the line already, but we're not very far from it. So I got to see it start to slip back down. Right now, we're pretty much high and last and almost a new high ground, and not quite overbought either. So, a little premature to say it's going to stop, but it looks like a great spot for it to stop rallying. Next, we got the head and shoulder top in platinum and in silver. Here's silver. We bought the bottom of the break because of support, oversold conditions, and a bullish engulfing. Perfect. It only lasted a couple of days, and we got bumped out of the trade with a profit. So, not crying over spilt milk. I don't like this rally. I don't trust it very much. The head and shoulder top still has a minimum downside objective of 24-ish. There's no change of opinion. The rally should stop fairly soon. It might get up to 29 or 30, but I'll try to, say so on the day it turns, but I don't trust the rally. I wouldn't go long here. I'm looking for sell signals. Exact same commentary for platinum. Head and shoulder top worked great. Small head and shoulder top, excuse me, as part of the rally. So, shoulder. So the small patterns have both worked, silver and platinum. The big patterns still need another big move down. I'm looking for 808 and platinum on the downside. And I like what I see in general. I don't trust the rally, et cetera, et cetera. Going to make new lows. Bear market, head and shoulder top. Copper is definitely different. Got oversold, had one buy signal that worked out okay on a longer term basis. The scalp trade, or actually the overnight trade, got bumped out with a small loss. Unfortunately, I should have, would have, could have changed the kicker to loosen it up a little, but I just got the trade on the books and I didn't want to change my default settings until after I had a little bit of a profit on the trade. So I stuck to my disciplines. That's the important thing. Disciplines. Discipline. That's why we have algorithms to take the human being out of the calculation. We are the wink link, emotion, greed, fear, all the stuff you've heard about. Second guessing, delay, procrastination. Gosh, there's a bunch of them. So new highs. We have another buy signal yesterday. Almost new high today. We are still long from yesterday's ER1 buy signal, and it's making money. Our stop isn't rushing up yet, so if it got hit, it would be a small loss. So those of you who are using the strategy might consider raising it to break even or a little bit higher. The kicker, the stop, next chart. Beans, grains, bean, oil, meal, corn, wheat, then cattle and hogs. Now, grains have been looking, and for the most part, are still looking very weak, very bearish, intermediate, longer term. But bear markets have little rallies, not necessarily as big as the downside correction and bull moves. Bull markets climb a wall of worry and they come down or go flat for a little bit longer periods of time, as long as the bull trend is continuing over months and months, quarters, half a year. But bear markets are a little different. They usually don't last as long. They usually drop off much faster. They get oversold more frequently, and the rallies don't bounce quite as much. Definition bear market. So we're oversold at the moment. We're trying to have a little tiny double bottom here. I don't know that that's going to work. It's so damn small. I wouldn't doubt it. It's due for a little rally. How much? Well, there's the resistance line 1036, and right now we're at 958. That's nice, but it doesn't turn it into a bull market. These beans have been coming down for quite a long time. That's July, that's July, that's July, 2 years plus new lows. So maybe a very healthy bounce up to 11. I gotta, I don't believe it yet. Soybean oil, daily data, new lows for the trend, very sharp break, but we're coming back to unchanged. Something might be developing. If we can get higher than yesterday's highs, we will have a green bullish engulfing ER buy signal, but that remains to be seen. Meal, and I'm still bearish in oil and beans, but hey, they could bounce a bit. Not a good place to go short when you're oversold or in support, like meal. Came down to support, got oversold, bounced off of it Tuesday, Wednesday, Thursday, a little rally, Friday today, lower by a small amount. Looks like it's primed to have a bounce that's better than what we saw yesterday. Downside objective been fulfilled from a double top, and I'm going to erase that also because I've been talking about it for weeks. And those little markers, we did sell the second high in the double top, which was the highest high for the rally. That's great. I always like to get in at the very bottom, February 29th, and sell signals on the very high. Now, that was almost a bearish engulfing, but not quite. If it had been, we would have turned red. I know I said we have overbought conditions and then a resistance area, and it worked pretty good. Now we're oversold and support, so I'm looking for a little bit more of a rally. But I'm sorry, this is a bear trend, I think. Historical support has held only in meal, so it might hold up better. But frankly, because of everything else, I'm looking for the support to get broken. Next is corn. All of the previous lows are gone bye-bye for a long time. But look here, we have 3 buy signals in the last month. That is indicative often of a market trying to bottom out in some way, shape, or form. The last buy signal we got was on the 12th, Monday, and we just got stopped out of it today. It made another new low for the trend in the support area, challenging the bottom of support. So that's a losing trade. This was also a very, very small, I think it was 2 cents losing trade, and that one as well. But that doesn't change the fact that these tend to cluster around bottoms and are frequently the exact low day, but we haven't got the low day yet. Today is the lowest low so far. Next chart is wheat. And we've got the lowest low in wheat, well, very close, on July 31st, plus another buy signal after that. And now 4 buy signals in the last month approximately. And this market is kind of going flat. We have a minor new low, a little washout of sell stops today, and we're currently a little higher, only 3.25 cents, but a little higher. So it is trying to form what I might call in a few days a shoulder low. Right here, these last few days, this week. The head is obviously going to be 3 days, July 29th and 30th and the 31st. The first shoulder was this low right here, July 16th. The timing looks pretty good from shoulder to head, from head to last shoulder. I just need to start to rally. Okay, assume I'm going to be right. What's it going to do? The neckline is right here. I already drew it in. You measure from the bottom of the bottom of the bottom to the neckline. And what do you get? A move up into resistance. Whoopee. No major long-term bottom, no major long-term breakout. Wheat is still a long-term bear market, but trying to build a minor bullish pattern that could cause a pretty good rally, worthwhile going long. But again, if you're going to ask me what the prices are going to be a month or two or three from now, I think lower. Next, cattle, bullish buy signal. We did get stopped out today. Our stop came up fast enough because of the rally and the momentum to trap a small profit. We're out, profit, okay. And thank goodness it dropped way down real substantially a little while ago. Right now, it's still below the middle of the range, below the lows of all of this week so far, Monday, Tuesday, Wednesday, Thursday. Today is Friday. So it's going to make lower lows again, I believe. And it is challenging this bull trend line. Again, let's see if it'll hold. If it closes below the line, it's probably going to start to drop off to this support level. And I wouldn't be surprised to see it drop off even more. Remember, I do have a minimum downside objective because of the double top formation of 174 and a quarter. So we're just getting closer to that. Bearish, looking for the bearish objective to be fulfilled. And now Miss Piggy, my last one, at resistance, stopped it yesterday, closed right there, couldn't make a new high. Today, dropped off below yesterday's low, very close to today's low, probably will sink and make new lows before the end of the day. Looking for a break below 171 and looking for a test of approximately 66. Quickly checking the E-mini to see what it's done the last few minutes. A little spike up, looks like a minor new high for the day. What is this, a 5-minute chart? Zooming in, so to speak, in a 5-minute. Yeah, barely a new high. So really, I'm not showing any reason to expect it to start to crash at this point, but soon. Have a great weekend. Profitable trading to you.